Hello and welcome to the second video in cryptocurrency trading, how to profit daily with technical analysis. In this video, I'm going to discuss support and resistance. Now, support and resistance, the very first thing that I would say about it is that any technical analysis based system, analysis itself, forecasting, anything along those lines will depend heavily upon support and resistance. If you do not understand this concept, your likelihood of success in the trading world is greatly diminished. So the first thing that we need to discuss is what exactly is support and resistance? Support and resistance can be thought of as places where the market supports price or resists price from gaining. It is where you have an imbalance of buyers or sellers, and the market simply cannot pass through that area. So, as you see the Ripple chart in front of you, it doesn't take a lot of imagination to notice that somewhere around 31.5 cents, there seems to be buyers coming back into the market. That is support. Market participants are supporting Ripple at this level, this price. Now, resistance is just basically the exact opposite. You can see that price could not break above 32.5 for these couple of days here. That could have been thought of as resistance. A quick word on support and resistance that I would caution you about thinking of them as solid walls of orders or anything like that, because the reality is they aren't. They are simple guidelines. One of the best descriptions of support and resistance I have been able to come up with over the years is thinking along the lines of a gun range. In an outdoor gun range, you have a shooter on one end, and then on the other end, you'll have an earthen mound. And the reason for the earthen mound is to keep the bullets from going through the other side, obviously. But why is it an earthen mound and not a steel plate, for example? A steel plate would cause a ricochet, so they use these earthen mounds. And what does the earthen mound do? It absorbs inertia. The bullets will stop somewhere in this range. And that's pretty much how support resistance works. So, for example, going back to the 31.50 level, 31.5 cents level here on the Ripple chart, you can see that even though that line does match up quite nicely, you can see we did break through slightly, and that is part of that inertia absorbing action that I was talking about. Unfortunately, far too many traders will put a stop loss order or choose to exit the market 1 or 2 ticks below these lines, and they almost always get tagged sooner or later. So because of that, you always want to put a little bit of a distance before you choose to get out. So in this case, perhaps you would choose to get out of the trade at 30.5 cents if you had bought Ripple and it broke down that bit. So you have to think of them more as guidelines. Every once in a while, they will be hard as a rock, but that's less common than an area like this. And a lot of that comes down to fills. You don't always get filled at the exact price. Large institutions don't want to throw all of their money in at one time because they can move the market against themselves. So if you can imagine a huge hedge fund looking to buy Ripple at 31.5, well, what they've been doing is they've been buying it in little bits and pieces every time it gets close to that area. Because if they throw their entire size in, they may shoot the market up several cents, getting filled along the way, making their order much worse. So there's a multitude of reasons to think that support and resistance is more of a zone. Another thing that support and resistance tends to do is show up at intervals that are round numbers. And what I mean by that is, I'll go ahead and go to the daily chart here on Bitcoin. So an obvious support level here is the $6,000 level. A lot of big money wants to buy Bitcoin at $6,000 so far. You'll see that time and time again. A large number will cause resistance or support. See, so that's 10,000. That's a large round number. So it attracts a lot of attention is probably the best way to think of it. So how do you draw support and resistance on one of these charts in TradingView? So let's go ahead and go to the hourly chart again. And if you remember, I had you drawing horizontal lines on the first video where I was talking about marking, and you can do it either a horizontal line or horizontal ray. A horizontal ray is just a line that starts where you click it. So let's say here, and you can see that you can mark it, and you can see that it goes through from that point on. Let's go ahead and remove that. Typically, you'll see it drawn as a horizontal line though. So again, let's draw that horizontal line. Let's look at 6,560. And you can see that this is an area that has offered support and resistance. And you will quite often see that. That's another thing about support and resistance that you should probably be aware of. There's something called market memory. And the reason for that is that you have all of these sellers in this area time and time again. Eventually, they get blown out. So now you have a lot of people who have been shorting Bitcoin at 6,560. It goes underneath. They get blown out again. Well, the participants that were losing money now have no interest in losing any more. So one price comes back down so that they can get out at either break even or, close to it. They'll gladly reverse their position to flatten out their position, meaning they have to buy Bitcoin to close out that short position to get out with their account intact. So it causes a bit of a self-fulfilling prophecy. The other side of that coin, of course, is that people have noticed this happen twice, and now all of a sudden they have that FOMO, that fear of missing out. So because of that, you'll have support and resistance kind of flip-flop. And you'll see that time and time again. And that's true in all markets. It's not just the cryptocurrency markets. So the last thing that I would say about support and resistance, it's more important on the higher time frames. So while you can go through on the 15-minute chart and find minor support and resistance levels, the ones that truly matter, the ones that truly move the market, are found on the daily or even weekly. An hourly support and resistance area is going to exist, as I mentioned, shorter time frames. But quite frankly, if you find these big levels and you trade from there, you can then drill down to a shorter time frame chart, and you can see that 6,000, the support on the hourly chart, was certainly a nice buy. That didn't change just because you changed time frames. However, when you draw and I'll go ahead and change the color of this, support line there, and then you go to the weekly, you can see that it's very minor. You go to the daily, and you can see that it's very minor. Yes, there's been a little bit of a reaction, but the real action is down at 6,000. So by all means, mark those high time frames, the weeklies and the dailies, support and resistance levels, and then trade from there on the shorter time frames. Thanks for watching this video. In this next one, we'll take a look at Fibonacci and Fibonacci extensions.